All right, and resume.
Okay, great. So just, I guess, quickly on this, what is Bitcoin solving for? Trust. And we don't think that, I don't think we always perceive how much trust is required to operate the financial system today, but we're trusting the banks with our money. We're trusting that when we tell the bank to send money somewhere, they'll do it for us. And we're trusting the government or the Federal Reserve System to not debase our money too much. So there's a lot of trust involved. So that's really the heart of what Satoshi tried to get at when he created Bitcoin. So let's get into what it is. What is Bitcoin? It is two things. So if you step away with anything, it is two different things. The first thing is it is a ledger. So that's like a wah wah. It's I'm talking it up like it's some life-changing technology, and then I say it is a ledger. It's an accounting ledger. That's underwhelming. So I'll explain it with a pen, and I'm not in the room, so just bear with me. But this is a pen. It is a physical pen that I can touch and hold, and I have possession of this pen. So if I were in the room and I handed the pen to Mark would have it, and it's a very simple little transaction or exchange, but it's profound in kind of its simplicity. I go from having a pen to having no pen, and Mark goes from not having a pen to having a pen. And if you think about what is needed to make that work, nothing is needed to make it work. It's Mark and I, and the transaction takes place, and I can't conjure up additional pens out of nowhere, and Mark can't do it either. And so the exchange happens, the ownership changes, very, very simple. Now let's think through, well, before I get there, what we didn't need to complete that little transaction. We didn't need a third party of any kind. We didn't need any of you in the room to verify that it happened and play like a referee. We didn't need a bank in the middle. I didn't need to give the pen to a bank first, who then passed it on to Mark. And we didn't need anyone like a central authority, like a judge or a police officer or some government entity to oversee the pen being handed from me and given to Mark. So now let's change a little bit. Let's say it's not a physical pen, but I have a digital pen. So in this slide deck, I have this little pen emoji I threw in there. Say I want to send a digital pen to Mark. And you might say, who cares? Why would you want this? And to that, I'd say so much of our lives is digital. 20 or 30 years ago, maybe not, but we buy everything online, and so much of what we do day in and day out is digital. So this would actually be extremely useful to be able to have a digital asset that you can move between two people. So it's really tough sending my little digital pen emoji to Mark. Did I make copies of it before I sent it to him? And so it's not just that I lost one and he got one. I made a bunch of copies. Maybe after I sent it to him, he downloaded it and emailed it to a bunch of his friends. Or maybe I uploaded this little pen emoji to the internet and millions of people downloaded it. So that's the core problem of kind of digital assets. And it's in computer science, it's called the double spend problem. Actually, it has a name. How do you prevent someone from copying a digital thing that you could just make a billion of? We've never had a solution to that until Satoshi's white paper in 2008, 2009, forget already. But let's back up before we get to kind of Bitcoin. We'll follow this thought process through. So how could we do it? How, we want to deal with digital items. Everything's digital. Everyone has a phone. We have to do this. So how would we do it? Well, maybe we create a ledger. Like someone's got to keep track of these. So someone will be like a central authority to keep track of the pens. So when I send one to Mark, I'll be debited this pen and Mark will be credited the pen. So that sort of works, but I don't know if anyone else has kids. I have a 10-year-old son, and he is into Fortnite, like a lot of 10-year-old boys are want to do. So in Fortnite, right, the game is free to download, but once you're in the game, you can purchase unlimited, costumes for your characters and weapons and stuff like that. They're called skins. My son Jonah would laugh at me if I heard me calling them costumes. So, but anyway, Fortnite, the company behind Fortnite, they can make these things, but they're a central authority. They're in charge of them, but we can't really trust that they're not going to make they'll sell as many Batman costumes to little kids as all day long. They'll just keep making Batman costumes. They're not unique, so that doesn't work so well. So how could we do it? And the answer that Satoshi kind of stumbled onto was the way to do it is not to have a central authority with the ledger, because then again, the problem is trust. You got to trust these people. Can you really trust them? Do you want to trust the government? Maybe it's a good government, maybe it's a bad government. So the answer is give the ledger to everybody. If you give it to everybody, you're not really trusting any one person. There's no single point of failure. Everybody has it. So in my example, when I send my digital pen to Mark, I broadcast it on an open source piece of software all around the world. And I say, my pen has been given to Mark. And if you think about it, this is a very difficult system to cheat, because if Mark tries to broadcast a transaction after that, he says, hey, he only has one. He has the one that I sent him, but he says, hey, I'm going to spend 10 of these things. It will not sync up with the hundreds of thousands or millions of versions of the ledger that are everywhere. So that is the breakthrough with Bitcoin. It's giving the ledger to everybody. And it's, in this little thought experiment or exercise, it's really important to kind of think about a couple of the key factors here. Number one, it is open source. So it's given to everybody. And at the beginning, you define the parameters. So you could say from the beginning, there's 1 million digital pens. And then that's all there ever are. Everyone's enforcing the code, and anyone who tried to create extra digital pens for themselves, it's not going to let them do it. Really, really critical is the digital pen left my possession, and it is now completely Mark's. I used to not be able to say that about digital things. It was only in the physical world could I hand somebody something, and it's left my possession, and it's now Mark's. But now I can send something digital to somebody else, and nobody's in between. It's not an email that belongs to Google. It's not a text message that belongs to Apple or my Apple phone. It's not even dollar bills that technically my bank is controlling. I can send it directly to Mark with no one in between. So that's a critical point and profound. And then also, again, I guess hammering it home, there's no third party. And then I would just say, we'll get into some of the details, but this is orders of magnitude better at performing a function of a payment network than what we have in place. Visa is a closed system. MasterCard is a closed system. The SWIFT system, it's been in the news a lot because when Russia invaded Ukraine, the US, one of the sanctions against Russia was they were cut out of the SWIFT network. So currently, no entities in Russia can send cross-border payments using the SWIFT network. That's a big deal. I'm certainly not condoning any, it's a tragedy what's going on, but it's, the fact that for good or ill, you can cut people out of the financial services sector is, it's a risk. Same with PayPal, same with Venmo. So that's Bitcoin in a nutshell. I don't want to go too much further than that. When we're done, we'll send out this deck. Mark's going to distribute it. Yep. But maybe just to blow through this, because I don't want to talk too long. I want to leave time for questions and kind of talk to you guys. But essentially, the other step of this is, what I was describing, the digital pen is a Bitcoin, if you haven't uncovered that yet. So in that same way, if you send Bitcoin to somebody, you transact or you transmit that all around the world. All of these transactions are floating everywhere. There's thousands, hundreds of thousands, millions of these transactions. So then it's the next part of the brilliance of what Satoshi did. And again, we don't need to go far down this rabbit hole. How do you organize those transactions? How do you timestamp them? What order do you put them in? How do you batch them together? So that's the other really important thing he did. He set up the code that, hey, we're gonna batch these transactions, so many, into what he called a block, and we'll put them on a block, And we're going to connect them to the last block of transactions. And then 10 minutes later, we're going to add the next block of the next transactions. And the other, this was probably too nerdy and too geeky to get it to go far down, but this whole thing is called proof of work, because what you can't do, if you're following what I'm saying, you couldn't just make a bunch of fictitious and false and fraudulent transactions and broadcast them out that, hey, I'm a Bitcoin millionaire now, and send that out and say, hey, I'll update all your ledgers. Joel has all the Bitcoin. You can't just do that for nothing. You have to do this mining work. And in order to put these blocks together, there's some very complex computational work that these computers need to do. You need very sophisticated computers that are expensive, and these computers need to work all day long, and they use a large amount of energy to do it. So you have very intensive energy costs and very intensive kind of capital costs to put these things up. And that was part of the design. It was, you can't do this for free. Otherwise, right, if you go to social media and stuff like that, you'll see scam bots, just like scam botting, just all sorts of stuff. And they can do that because there's no cost to them. You can transmit as many scammy things as you want all day long, and nothing will stop you. But you can't do it. Why would you waste all this energy and time and do what you have to do to mine Bitcoin? So that's blocks and mining in a nutshell. And every time a new block is found and this computational work is done, there's a reward for doing it. There's an incentive to the miner. Otherwise, why would you spend this money to do a block? There's a reward. You get new Bitcoin. So this is how new Bitcoins are created in the Bitcoin world. Currently, every time a block is mined, the reward is 6.25 Bitcoin. So Bitcoin, I think, is $21,000 today. So that's a big reward. So there's a lot of incentive to do this. That number's been shrinking, but it's 6.25 today. Okay, shifting gears a little bit. That's Bitcoin, the payment network, and how it works, and how now, for the first time in human history, we're able to hold a digital asset, just like I'm holding a pen in the physical world. The other thing that Bitcoin is it is the digital currency of that payment network. So that's also important. You couldn't, everything I just described, you could say, well, why? You've got this network, you're going to do the transactions, that's how you're going to do them. It's great, I can do this. Why don't we just do it with dollars? And the problem is, we have no idea how many dollars there are, right? There's most of it, probably 96% of all cash is digital, but I don't know how much cash you guys, have under the mattress and stuff like that. So that you couldn't just do it with dollars. You had to create something new. What is the asset that will trade on this payment network? So he called it a Bitcoin. So a lot of people get confused by that. Bitcoin is two things. If Satoshi could go back and do it again, I think he would change it. He didn't have a good marketing guide. Almost every major cryptocurrency after this, they name these things two different things. So you've probably heard of Ethereum too, that's the other major. So Ethereum is the name of the network, and the asset that trades on Ethereum is called Ether. And so you can kind of keep it straighter with other stuff because there are two names. So Bitcoin is the name. Just like on the payment network side, on the asset side, Bitcoin is also an asset. It is orders of magnitude better at being money than our current, I'll define all this in a minute, but our current fiat monetary system. It is infinitely better than the dollar system we have right now. It's private, its value is determined on the free market, and we know exactly how much there is today and how much there will be tomorrow, down the road. And it's, more and more, it looks like it's very important to try to separate money and state. The state is separated from all sorts of stuff, separate, religion and state, things like that. I think all of us recognize we should have freedom in all these areas of our lives, but for a very long time, it's just been accepted that the state should control money. Some very simple Bitcoin terminology, just so we're all speaking the same language. You can see this first bullet, the currency symbol for Bitcoin is this B with like lines through it, like a dollar. The code is BTC. So just like if you bought shares of IBM, that ticker symbol is IBM and stuff like that. It's kind of ticker symbol, if you will, is BTC. The supply is fixed at 21 million Bitcoin. And again, just like when we were talking through my example with the digital Apple, and kind of setting this up from the start, it's open source software, we created. From the start, there's a variable in the code that says there will be 21 million Bitcoin. And every single time a transaction is processed, if someone tried to alter that and say, here's a transaction and here's a bunch of other stuff about what's happened, and oh, by the way, we doubled the amount of Bitcoin. All the people running the Bitcoin code, this thing would be flagged and thrown out immediately. No, we're not changing that. That is hard and fixed. So there's only 21 million. Common misconception is that you have to buy a whole Bitcoin. You do not. So a Bitcoin is divisible to 8 decimal places. So you can buy 1/1,000,000th of a Bitcoin. The Bitcoin lingo on this is, it's called a Satoshi, that's for the creator, or sats for short. So I have, again, Bitcoin memes are very popular. Here's this guy, he's all excited to stack sats on payday. And an altcoin, you'll hear that term a lot in the industry. That just refers to pretty much everything that's not Bitcoin. So there's hundreds of, I don't know about hundreds of that, but there are thousands of other cryptocurrencies out there. And then you store a Bitcoin in a Bitcoin wallet. So all it is a little thing to store Bitcoin or other cryptocurrencies. It could be hot. That means it is connected and online, or it could be cold, which usually just means it's on a device. So we'll talk through it later. I'm kind of talking through buying Bitcoin, but it's just a little device that looks something like this. It looks like a USB drive. But if you put something on here, again, it's like me holding the pen. I'm sitting here holding a pen, and then, you could have $100 billion on this thing, and it's just in the palm of your hand. You could send anywhere. So hot wallet, cold wallet. We'll kind of talk through a little bit more of that in a bit.
So you might do this later, but if you're not, I'd love to talk a little bit more about the supply side of things. Kind of where are we now with regards to what's been mined, and what does that mean for people that are interested in learning more?
I gotcha. On the next slide, we're here.
You're welcome for the segue.
Yeah. Thank you. Yeah. So this is a graph of the Bitcoin issuance schedule. The black line is the supply. So as I said, over time, the amount of reward you get for mining a new Bitcoin, which is how the new Bitcoin kind of get printed or mined, it's going down over time, which is why this line is really steep at first. In the first 2 years, 10 million Bitcoin were created. And then the next 2.5 years, that got cut in half. So we are here. There's just over 19 million Bitcoin in existence trading today all over the world. And again, every 10 minutes, a new block is mined. So every 10 minutes, another 6.25 Bitcoin are coming. All of the Bitcoin will be mined by the year 2041. And this yellow line just represents, this is the block, they call it the block subsidy, this graph, but this is the block reward. So it started at 50, and it got cut to 25, and it got cut to 12.5, and here we are today at 6.5.
So it's not a question of however fast they can get there. It is released methodically. It's not just let's get some more computers involved and maybe it'll be done in 2035. It's a defined.
Yeah, exactly. No. So it's a fantastic question. It gets a little technical, but also involved in kind of the code is a concept of the Bitcoin mining difficulty. There's a difficulty adjustment. Pretty much, if the network sees how much computing power is being thrown at trying to solve the next block, as more and more computers come online to do this, and I can tell you there are huge companies that are they've got Bitcoin farms that all they do is mine. So there's always more and more energy and computing power being thrown at this. As that continues to rise, the difficulty adjustment it's automatic. It's in the code. It's not like someone decides this. Keeps getting ratcheted up. And they do that such that that's how they control that each block is going to be 10 minutes. So if all these extra computers come online that keep trying to do this, and they're, could potentially find Bitcoin faster, the difficulty adjustment is what comes through and kind of regulates that. Like, it'll make it more difficult so that it's approximately 10 minutes. It's not like you can't set your watch by it. So I can't tell you that, in 2029, it will be to 8 decimal places. This is how many Bitcoin will be, but within a very short band, you would know what it is. Just on price and where we're at, here's a Bitcoin graph. I brought this down last weekend when I was working on this. So Bitcoin is volatile, people. I think it's at 21,000 today. So it's been a rough couple of days for the old Bitcoin. The high, it just almost touched 70,000. I think this was in the fall of last year. Yeah, but that's where we're at now. And it is volatile, and that looks scary. My next graph I want to show you. So this is the same thing, only you can see this toggle here. Am I looking at this graph linearly, or am I looking at it on a log basis? You can see on the log, this definitely looks more like a smooth upward trajectory of value. So the reason I like to look at it on a log basis is not just because it looks better, it makes me feel better. You have to look at it, when you look at something linearly, the y-axis here, these are all fixed points between these things. So, right, going 0 to 10K is the same exact delta or change on the y-axis is going to 20. These are all $10,000 increments. But that's not exactly how things work, or very helpful if you're looking at something over, many, many years or decades or something like that. Because, right, going from a penny to 10 cents is a 10x increase. And then going from 10 cents to $1 is another 10 cents. And going from $1 to $10. So you can kind of see that on a exponential level, taking that into account, that, hey, this thing was trading for pennies in 2010, and now it's worth 24,000 and was as high as 70,000. For me, at least, I care more about what does that growth acceleration kind of really look like. So anyway, just a heads up when you're kind of looking at Bitcoin graphs. And then we talked around this a little bit. I don't think I've actually said the word hash out loud, but what you're really solving for when you're finding these Bitcoin blocks to group these transactions together, think of them like puzzle pieces that you're connecting. What you're really looking for, the right terminology, is you're looking for the cryptographic hash that will tie these things together. And that unique number or variable is all based on all the transactions that are in the prior block and various random numbers and characters that come out of that thing that could make a cryptographic hash that will work for the next block coming. I'm not a coder. I don't write code. That's about as deep as my understanding goes. But Mark's question a couple minutes ago about, is it always 10 minutes and stuff like that? And I mentioned that there's always more computers coming online to mine Bitcoin. This is that illustrated in a chart. There is just a tremendous amount of hash rate coming online. So on the y-axis, this is 200 million terahashes per second. And all these really are guesses of what this big, long number or numbers and characters could be. It's just a guess. I think a terahash is 1 trillion guesses a second. So the current capacity of the Bitcoin mining network is 200 million terahashes, like $1 trillion guesses a second.
So that's the work. Just to pause there, that's the work that these computers are doing. They're not writing code. They're not producing anything. They're guessing to basically build out the block.
Yeah.
Oh, we got it right. Okay, we're a little bit further.
Right. And it sounds silly that you'd be spending all this time and effort and energy and electricity to guess numbers, but
When you
And-
put it
and
like
that-
that, yeah.
Yeah. And we'll get to that on like the common kind of critiques of Bitcoin. It sounds like a waste, but it's like, it going back a couple slides on that, you have to have, there has to be a connection between the physical world and the digital world. If it's just digital and you could just spam transactions, it doesn't work. You have to have some skin in the game. There has to be, someone's got to be doing something energy wise. And this is just what they came up with. You could come up with other stuff, but this is the first real breakthrough to do it. But anyway, this chart, I don't look at price, I follow the price, but I really care about how, this is really telling me how secure is the network. My transactions, the Bitcoin that, are in my possession, they are buried under a wall of digital kilowatt energy that is the strongest computer network that the world has ever seen. Okay, that's Bitcoin in a nutshell. I'm going to fly through some of the macroeconomic stuff because I'm dragging a bit. So a very brief history of money. All I want to show you with this is there have been 10 different reserve currencies since the year 1200, right? The Portuguese real, the Spanish real, Dutch, French, British sterling, then the US dollar came on. These things change. I think we live in a world now where the dollar is the global reserve currency. It may not be the global reserve currency in 50 years or 100 years. Like, we don't know. These things change, and we should expect that they would change. This particular graph I grabbed off the internet, they showed that, Bitcoin's my personal view is that Bitcoin is not going to replace the dollar. I don't want it to replace the dollar. I think it will be where people want to put their money to save value, but maybe on a daily basis, we're converting Bitcoin to dollars to buy our Starbucks coffee or something like that. But anyway, I just want to point out that just because something is today doesn't mean it will be this tomorrow. I'm not going to talk through all this, but just know that this slide's just the background on how we got to where we got with the dollar. So the key thing is the 1, 2, 3, the fourth point on here. Actually, let's talk through the third and fourth. In July 1944, the US dollar became the global reserve currency of the world. It was nearing the end of the war, and so the dollar became the dominant currency. All of the countries in Europe gave all of their gold to us to store safely in the United States. And this Bretton Woods meeting took place, and this Bretton Woods system came into being. That was essentially just, hey, the US will, at any point in time, if you come and want to convert your dollars, because you're going to be using dollars now, because the dollars is the world currency. If you come to us and want to convert your dollars back to your gold, we'll honor that. We'll give you your gold at this set exchange rate. So then Vietnam happened, and we started spending a lot of money as a country. And it was very clear that we were debasing our currency and that we could never repay these people their gold on that exchange rate that was set. So in 1971, President Nixon announced a suspension of the dollar's convertibility into gold to these foreign nations. This was a big deal. France actually called her bluff. France sent a battleship to New York Harbor, and it was either 70 or 71, to collect its gold, and we wouldn't give it to them. This was a default on the part of the USA on its debt. Like, there's no other way to look at it. They wanted repay in the means of which was established, and we said no. So we won't talk through the rest, but that's the key point. From 1971 on, we were totally off a gold standard, and we were really off it before, but we don't really need to get into like ancient history in the 30s and 40s. But from this point forward, there is absolutely nothing backing the United States dollar except, the full faith and credit of the United States, which is kind of the tax base. And that is, again, with my kind of free market background, I will tell you, my thesis is that is a very dangerous place to be. And so let's talk through what that looks like a little bit. So fiat currency, this kind of term I'm using, it just means by decree. So again, something doesn't have value because the market says it has value. A dollar bill is just, it has ink on it that is of a certain, style, and that means a dollar. It's the same piece of paper as for $100 bill, just the ink looks a little different, the characters. That's all it is. It's not backed by anything. If you look at the history of the dollar, and this is going back to 1913 when the Federal Reserve Act was passed by Congress, it's down, it's pennies on the dollar from where it used to be. It's lost almost all of its value. And as everyone in this room is seeing today, we are accelerating again into nothingness with what the dollar is worth, right? Gas is up, the CPI, the consumer price index rate is consistently running 9%, 8%. It's getting very hard out there. As I said, or characterized at the beginning, the ice cube is definitely melting. Mm-hmm. So who is in charge of this stuff? The Federal Reserve. They're supposed to be like a quasi-private bank. It's not supposed to be tied to, it's not necessarily the federal government, but right, they're in charge of creating money. So a couple graphs I put in here. This first one is M1, which is just a measurement of how much money is in the economy. What I really want you to focus on is like this crazy vertical drive that happened during the pandemic, where, if you look a little bit further back, you can see the increase during the global financial crisis, like just shy of the 2010 mark. But look at what happened in 2020, how much money we actually printed. And I'm not here to debate, the politics of it, Democrat, Republican, did we need it, did we not need it? Like, I just want to talk facts. Like, this is what happened. So we print all this money. And there was a famous 60 Minutes session. This is one of the Fed presidents, I think his name is Kashkari. The 60 Minutes guy is asking him, you guys are printing all this money. How much can you do? And the guy literally says, he kind of pulls the curtain back for a second. And he says, there's an infinite amount of cash at the Federal Reserve. And the 60 Minute guy was like, wait, like, you're not supposed to be saying that out loud.
Yeah, right.
Yeah. So this other picture, that's Jerome Powell. He's the chairman of the Federal Reserve. That graph is just showing the size of the Federal Reserve balance sheet. So the Federal Reserve is the one who makes the money. And usually how this works is the Treasury Department, they want to issue debt. So they're going to take the United States further into debt. And we don't always have buyers of that debt. More and more frequently, there aren't a lot of buyers for it because they're worried about how much debt there is. So the Fed will step in and the Fed will buy it. And the Fed just creates the money out of thin air to buy the debt, right? It's just, they say, yep, issue me the bonds and I will send the Treasury, $5 trillion. And that $1 trillion didn't exist the second before someone clicked the button and said it. So the size of the Fed's balance sheet is something to watch. And then sort of, I'd say the overall Bitcoin thesis, as far as its value as an asset or as a currency, is just the fiat system we're in is like, we are in an unsustainable debt spiral. So the total US stated debt is $30 trillion. That doesn't count unfunded liabilities, which are in excess of 170 trillion. So $30 trillion is just, that's what we're on the hook for today. We've issued bonds of that amount. The unfunded liabilities is like Social Security we're going to have to pay for everyone in this room, right? When I'm 40 years from now, when it's time for me to collect on Social Security, I guess it would not quite be 40 years, but anyway, you get the point. It's just unsustainable. It's a major challenge to make the interest payment on the debts at this level today. And the Federal Reserve has kept interest rates at historically low rates. So they can't let interest rates rise, because if they do, the amount they have to pay on the debt as a percentage of the US budget, the math doesn't work. And the way this will go is the US will not default on the debt, right? if there's a day where they have to pay a bondholder back, say China bought a bunch of bonds, when those things mature, we will pay them. Just like, the French came to get their gold with their battle. We will pay the Chinese. We're not going to say, no, we don't have the money, we're not going to pay. But we'll print the money to repay them. We'll just keep inflating and debasing the currency. So that's how these things work. A government usually just doesn't default on its obligations. It just keeps debasing its currency. And then again, everyone's living this, but this is the percentage of countries on the planet that have a consumer price index above 6%. So this phenomenon is not unique to the United States. Over 80% of the globe is living in an environment where prices are going up over 6%. Untenable, unsustainable.
And just to comment on that, typically you want to be in the 3 to 4% range. That's defined as controlled growth, normal appreciation or inflation, whereas we're at 8 or 9% now and have been for the better part of this year. It's just it's untenable.
Yep. So what it really boils down to is this graph on the right. If you are in US dollars, the numerator is your wealth, how much money you have. And the denominator could be anything. If there's another crisis, another 10 trillion could drop out of the sky tomorrow. With Bitcoin, your wealth is the numerator, and that denominator is not changing. So when you really think about it, when you see the price of Bitcoin going up, I don't really look at it like the price of Bitcoin is going up or that Bitcoin is appreciating. It's just gaining value relative to the dollar. The dollar is just continuing its descent into the abyss.
That's such a good
one. Yeah. And then this is just to sort of illustrate, the dots on the left are people. Every dot is a million. So there's 350 million people in the world. And then on the right, each of those dots again is a million. There will only ever be 21 million. So I did a Google search the other day. I think there was like 56 million millionaires on the planet. So even if every millionaire decided today, like, I got to get Bitcoin, they would, the most they could get if they all tried to go get it. And, you can't do it, but if they tried to, would be like, if you have 0.37 Bitcoin or something like that, like that's as much if you split it up equally. So just to kind of put it into perspective. All right, so blowing through common misconceptions about Bitcoin. The lingo on this is FUD, F-U-D, fear, uncertainty, and doubt. I'm gonna go really fast here, guys, so just don't. Bitcoin is a fad or a bubble. It's definitely not a bubble. We're many, many years in. As I said before, BlackRock's on board, Fidelity's on board. Most countries on the planet have issued ETFs. So it's not even like you have to go get the Bitcoin yourself and hold that digital Bitcoin. You can just call your broker and say, hey, buy me some Bitcoin. And they'll buy it inside of a fund. So it's not as good as holding the Bitcoin yourself on a device, but you can still do it. The United States, you can't do that yet, but adoption is moving. It's not a bubble. It's not a fad. It's going to go. What happens if the internet goes down? Just a ridiculous argument. If the Bitcoin, or I'm sorry, if the internet stops working, it's chaos. Your bank account won't work. We've got much bigger problems than Bitcoin.
Yeah, right.
Bitcoin is too volatile. It is volatile, but it's what is your time horizon? So if you're looking at this like, this is pristine savings technology that I can store generational wealth in over years and decades, it's not very volatile and it appreciates. If you are trying to day trade it in your time horizon, days and weeks, it is speculative. You will lose your shirt. There are very sophisticated traders that are trading it all day long. You don't want to be in that bucket. And the whole point of my second section on kind of the macroeconomic background and kind of what's happening with the dollar, what's happened to the dollar to this point, and why I don't see another path where the dollar just becomes safe, right? It's not depreciating and losing 2 to 3 to 4 to 8% per year. If that's happening, then what do you want to be in? Do you want to be in a volatile appreciating asset? Or do you, if you just like the stability of it, do you want to be in a stable, depreciating, sinking ship, like just floating off into the abyss? Because that's pretty much what fiat currency is.
Yeah, when you put it that way.
Yeah. Bitcoin won't scale and can't, it's great, it's wonderful, but if everyone was using it, 350 million people on the planet can be using it. Just, I guess this graph is just saying Bitcoin with, what I would call upgrades, or we won't get into the Lightning Network and what that is, but the amount of transactions per second it can do, there's no problem. It's better than other cryptocurrencies, and it's better than Visa or PayPal or Venmo. You'll hear this a lot. Bitcoin is for criminals. It's used to launder money and, for drug dealers. It is not. There was a study just done that like 0.3% of Bitcoin is used for illicit activity. Moms, dads, grandmas are all investing in Bitcoin. It's just because a bad person would use it. I kind of have it written here. Like, bad guys use cell phones.
Yeah.
Bad guys use cars. It's a thing is not bad just because what somebody may do with it. So it's a kind of a flawed premise. Bitcoin is backed by nothing. So is the US dollar. The US dollar is even worse because it's being printed. And at least Bitcoin is backed by this network and all this energy that's going into it. Bitcoin can be hacked, right? If you invest in Bitcoin, you'll have your Bitcoin stolen. You have to be careful here. So we'll walk through it in just a second. But if you buy your Bitcoin and you keep it on an exchange, that exchange could be hacked. And just like someone could, I guess, hack into Fidelity. And if you had some Apple shares of stock, maybe somehow somebody hacks you and take your Apple shares. It's the same thing. But if you transfer your Bitcoin onto your personal private wallet and you do a reasonable amount of safekeeping on that, it will not be hacked. This thing on the right shows kind of the odds of someone guessing your private key to a wallet. So the first orange numbers up there is the odds of winning the Powerball. And then the whole way down at the bottom, which is like, who knows, that's like 100 million X in probability, is the probability of hacking someone's private keys in their wallet. Bitcoin could be copied. What stops, someone from just creating Bitcoin 2.0? Thousands have tried. There's all sorts of other cryptocurrencies. Bitcoin's still the largest in market cap and has kind of what I would call the first mover network advantage to that. So the last two are probably the most legit arguments. So Bitcoin is going to ruin the environment. All these people are mining Bitcoin. It uses all this energy, and that's terrible. What people don't understand, and it's kind of counterintuitive, Bitcoin incentivizes green energy investment. And what that means is Bitcoin miners don't want to spend money for electricity. They do not. They don't want to be burning coal, burning gas. Renewables is far and away the best way to mine Bitcoin, right? It's just the sun is shining, I have no overhead costs, and I'm making money. So the way the energy grids have really developed for, civilization was, mankind would kind of just settle wherever there were river systems and for trade routes and stuff like that. So that's where the people, cities are. And it's only like hundreds of years later where we're like, hey, there's this waterfall in this stranded energy source somewhere totally far away. And the real problem with renewables is transporting the energy, right? It's energy loss and just like getting it from point A to point B. Bitcoin in the mining proposition or value proposition of it flips that on its head. It's like, let's bring the people where the power is and not the reverse. So this graph here on the right is just showing that every single year, the percentage of miners that are mining Bitcoin, the percentage of what they're using to do that is every year rising. It's more and more renewables. So Bitcoin is really kind of the missing puzzle piece to solving the energy problem and like getting more investment in sustainable stuff. I don't have time to go further into that, but that's a whole conversation in itself. And then the last one, and to me, this is the most legit. the government will shut it down. So, right, Joe, everything you said is probably true. It's an existential threat to fiat currency and to the dollar specifically. Therefore, the government, they're not going to give up the printing press. They like it. They want to be able to print money. And to that, they can't shut it down. The network is the network. It's an open source piece of software. It'd be like shutting down the internet. You can't shut it down. You could make it illegal to do it. You could say, hey, you can't own this. But I guess, first of all, I'd like to think that in the United States, right, we're very free and we have a very well-established system of property rights. Banning a digital asset, it's not like, we're not buying bazookas and tanks or hardcore drugs. Like it's a digital asset. So what threat does it pose or what harm does it do? And in my opinion, the train has really already left the station. If the government wanted to do this, I think they needed to do it circa 2013, 2014, 2015. In 2022, millions of Americans are invested in Bitcoin. Millions of companies are in it. There would be and there is a very powerful Bitcoin lobby that would just say, no, we're not going to shut it down. And then I guess my last point on that is I just have faith in humanity. I think that money is too important of a good that in the long run, society won't permit a government to say, that needs to be banned. I think we'll look back in 30 or 40 or 50 years as Bitcoin's adoption increases. I think we'll look back at this period of history from 1971 when it was pure fiat currency, just print the money. We'll look back at this and we'll be embarrassed. I think it'll be one of these culture moments where it's like, that was wrong. We don't know why we were doing that. We just permitted the government that every year discreetly, they tax, there's federal tax, there's state tax, there's local tax, there's sales tax, there's tax on gain. They do all that. And then after all that, the government discreetly will steal 2 to 3 to 4 to 8 to 9% of your money every year by debasing the currency. I think eventually I feel like the shroud will be lifted off. Okay. So you've suffered with me through what is Bitcoin and economic theory and common misconceptions. So if you made it this far and you are at all interested, let's have a brief discussion on how do you do it? So I'll give you, this is by far the simplest. And again, I'm happy to kind of talk offline or one-on-one. You can just send me a note or something like that. Happy to help. First thing you would do is open an account on a cryptocurrency exchange. The most popular in market share in the US is probably Coinbase or Gemini or FTX. It's just like opening a bank account or an account with Charles Schwab or TD Ameritrade. You just verify your identity, you link a bank account, and then you deposit some dollars into there, and then you buy Bitcoin. Very important. At that point, you own that Bitcoin, but it is being held on the exchange. This is like what I was talking through before, like if you buy shares of Apple stock on Fidelity's platform, Fidelity's holding that for you. And as long as you know that, you understand that, and you're okay with that, and you trust them, that's okay. But history's shown us it's not always great to put trust in stuff like that. So I would encourage you, when you feel comfortable enough, that you purchase a hardware wallet. So I've held this up a couple of times. This is a Trezor. This is what it looks like. It's very easy to set these up. You would purchase this directly from Ledger or from Trezor. Don't get on eBay and buy like a Ledger wallet, right? Those are scams. It's someone who already knows what the private keys are to the wallet. You'll have your funds stolen. So go direct. When you buy these, and the first time you install them or set them up, they will, on the little screen on here, will show you 12 or 24 unique words in a specific sequence. Those are the private keys to the wallet. Whoever is in possession of those keys can wield whatever Bitcoin is, in this digital wallet. When you broadcast a transaction, so if I say I want to send, half a Bitcoin to Mark, this Trezor would be hooked into my computer, and I'm, using a little user interface. When I go to click send on that, on this little display screen. I will authorize the transaction from this device. So I have to click this button and say, yes, I want to send that. And when I do that, my private keys are signing that transaction and the Bitcoin would be sent to Mark. So the private keys are really careful. You write them down in ink. Do not write these down on a computer, right? That just opens it up to it's digital now. And if someone, hacks your computer or something like that. So don't put them anywhere digital. And then the last thing you would do is you would send from, let's say you signed up for Coinbase, whatever Bitcoin you got on Coinbase, you would send to this device. This device has a public address that you could send it to. So it's different than the private keys. It's the outward facing address of this thing. And again, we're not going to walk through like the steps on how to do that. Last thing I have here is there's a guy on YouTube. His channel, I think he's Crypto Dad. So he's just a super nerdy dad. But he has like a super great YouTube channel where everything listed on this slide deck or this slide. He talks through how to set up a Coinbase account, how to deposit dollars, how to buy it, how do I send it off Coinbase somewhere else. So you can definitely do that. Again, I'm happy to talk and you can reach out to me. Very happy to help anyone get started. And then last but not least, we talked all about Bitcoin. What about other cryptocurrencies? You have to start with Bitcoin, in my opinion, because you have to get your brain around what a cryptocurrency is. Bitcoin is the first. Bitcoin is the one you have to understand. Avoid almost everything else. They are all trying to do different things. Many of them very different things from Bitcoin. So unless you really put the work in and understand the value proposition of that other coin, just don't do it. You have to learn a lot more than just log into Coinbase, seeing that this particular token, oh, this thing's only 5 cents a coin. I'm going to buy 1,000 of them or invest $10,000. Don't do it. Stick to Bitcoin. If you want to go beyond Bitcoin, Ethereum is the other blue chip one. So if you wanted to buy some Ethereum, you can do that. Again, that's beyond the scope of our conversation here, getting into Ethereum and other coins. But I'd leave it at this. If you look at the stuff to the right, let me move my floating head. This is from a study that Fidelity just put out. So Fidelity put out a study about Bitcoin, which summarizing it pretty much said, like, there's Bitcoin and there's everything else. So this is 5 years ago to now, and you can see the top 10 alternative coins are totally different. So, if you jumped in 2017 and said, I'm taking Dash and Monero to the moon, you probably lost a lot of money. And it's probably likely that if you jump into 2022 and say, I'm taking Terra and Polkadot, and I'm going to be retired on a beach in 5 years, probably not going to happen. So do not risk more than you're willing to lose in any of this stuff, but really stay away from the altcoin stuff. Is very risky and not for the novice. So I think that's it. I have a couple of appendices, and when we send this deck out, you can look at other stuff, just other graphs and information I have in there. But I think that's all I got, Mark.
I'm just disappointed you weren't better prepared, Joel. That's my main disappointment. No, that was illuminating, and even as someone who understood a lot of the big picture stuff enough to make that decision when you first introduced it all those years ago, that this took it a whole lot deeper for me personally. Anyone have questions or comments? Everyone has a question or comment. Let's move from Lynette across the room.
So with it being the 21 billion, at some point, trillion, what is it?
Million, 21 million.
Million, okay. At some point, there's no more to buy. Like, it's capped out, everybody's bought in, and there's no more to be had unless somebody's willing to sell what they already own. Is that accurate? You know
Yeah.
what I'm saying?
Yeah, no. So that is accurate. Just keep in mind though, so it goes out 8 decimal places. So if the adoption curve and the if this keeps growing the way that it is, it's very likely no one will really ever deal in whole Bitcoin, right? We'll have all sorts of names for what 0.001 Bitcoin is, the same way that a Satoshi is the smallest, it's 1/100 millionth of a Bitcoin. We call them sats. I'll send you 500 sats or something like that. So yeah, but the 21 million is fixed.
kind of like money when it was on the gold standard.
Right.
There's a finite amount available.
Yeah, but that doesn't mean we can.
Yeah, exactly.
Jessica.
So based upon where the government is, you don't feel that they'll do the same thing where they could ban it from being used like they did in 1971, where they took money off the gold standard, which was backed by the world, and basically took that away from everybody, and now it's fiat currency. So they did that once. Who's to say that they wouldn't do that again, even though there are the amount of people that have adopted into it. There was that many people who adopted into the US dollar when it was backed by the gold standard.
Yeah, no, it is a risk. And as I tried to point out when we went through that last thing, like, to me, that is the biggest risk. I really think it's difficult. It's extremely well entrenched. And it's not like we don't have clues on where the government is leaning on this. So the head of the SEC, his name is Gary Geithner. And he is a former MIT professor who understands Bitcoin very well. He taught a Bitcoin course when he was at MIT. He's very favorable on Bitcoin. Likewise, President Biden issued an executive order pretty much asking like the executive branch, like, we need to look into cryptocurrencies and Bitcoin and try to come up and formulate like thoughtful regulation on how to do this. And again, the SEC has been very consistent saying the same thing. They're looking at regulating, not banning. What the government really has in their crosshairs are all of the altcoins. And, we didn't get into a lot of it, but like most of these coins, this was not Satoshi creating it and he's gone, and it's been this decentralized, no one's at the head of this thing. There is a founder. He pre-mined most of the coins. So he founded it and he's already sitting on like the majority of the tokens or the coins. And then people get into it thinking they're going to make all this money. And then he pulls the rug out when the price goes up, like he's selling all his coins. So that's what the government is after. And the SEC has already pretty much come out and declared Bitcoin a commodity, which is very, very important. They're looking at Ethereum, pretty much Ethereum, and then everything else. They're calling that a security. So there's a big distinction between what's a commodity and what's a security. A security, right, is like a stock. It's something that a company created and issued, and there's a head to that company. And they have a fiduciary responsibility to not defraud the investors, not, issue fraudulent financial statements. They have all these, reporting things. Contrast that with a commodity, which is what they're calling Bitcoin. No one's in charge of iron. I can tell you, right, I'm in the coal business. No one is in charge of coal. It's a commodity. There's a fixed supply of it. No one can create more of it. And therefore, like, there aren't SEC disclosures about, the coal group or something like that of what they're doing. So it's looking less and less and less and less likely that there's any sort of ban on the horizon. There's regulation. And then, there's people like me that are more reluctant to regulation. I can tell you there's a whole bunch of people in the Bitcoin space that are cheerleading regulation because they think, and they're probably right, there's like a wall of trillions of dollars of institutional money, right? College endowment guys who, right, they'd love to get into Bitcoin to capture returns like we've seen, but they can't, for compliance reasons, they can't jump into something like this because it's too risky and stuff like that. But if it's regulated and it's, there's more rules of the road, then maybe all this money can come pouring in. But anyway, long-winded, but it's not looking like a ban at all. It's more of regulation. And to the extent there could be bans, I think we're talking about, these very clearly fraudulent, altcoin scams and stuff like that.
Kim and Preston.
Okay, I had a question, kind of what you were just saying, I guess. You said you're a CPA or you have a CPA distinction. I was wondering, are people reporting what they're making with Bitcoin? Like, is that something the government are people being taxed on what they've made with it?
Yes, yeah, absolutely. So officially, the IRS treats Bitcoin like property. So officially, it's right. It's not designated as a currency. So right, you don't issue, or you have no gains or losses on trading the dollar or something like that. So yeah, if you buy Bitcoin and it's $1,000, and if it goes up to $10,000, you will pay tax on that $9,000 worth of gain. Again, it's property. So if you held that for less than a year, it's short-term capital gains tax. If you held the Bitcoin for more than a year, it is a long-term capital gains tax. But just like property or something like that, you are never taxed on the unrealized appreciation. So if you just buy it and hold it and you don't sell it, and if you look at your portfolio and you're way up, you don't owe tax until you sell it, just like a stock.
Right. So is that though, so if you're holding it on that card or whatever that thing's called, the wallet that you have, a physical wallet, you put it in safe and you have your words on paper in there, whatever that is, the code that you write in to use it, then none of that, how would that even be known by the government? Because it's not like you're getting any kind of form that says you have it, or it would only be if you, even then, like if you sold it, is there anything really reporting? Like we have, forms, right?
Yeah.
So we get what we're paid. So there's nothing really reporting that, right? If you're not going through anyone but yourself. I'm just curious how that works.
Yeah, no, it's a great question. So you do have to report it. Actually, the IRS has snuck it on the Form 1040. It's very important to them because there's a lot of money to be taxed in the crypto.
Right, and it is.
The last 2 years at the top of Form 1040, there's like a checkbox. It asks you, have you bought, sold, traded cryptocurrencies this year? And right now it's just a yes or no question. And they're sort of counting on you to self-report if you had gains. So it's in its infancy. But the other thing I would say is, this is not the Wild West. So the on and off ramps to get into Bitcoin are heavily regulated. So, and I guess what I mean by that is, to get it, you really have to go to Coinbase, right? You have to buy it from an exchange. I guess there's a black market to maybe have someone trade you some Bitcoin. So that stuff is regulated. Like I've only ever bought Bitcoin on Coinbase or a couple other very reputable exchanges. And I just fully expect that somebody at the IRS, records are being shared that like Joel Mumper bought Bitcoin this much on Coinbase. So I just sort of always have operated like they probably know exactly what I'm holding.
Yeah.
You mentioned something about asking your investor, but is that not legal here in the US? And is that why there are now, you said there's lobbyists being created, but I'm wondering, you said something about other countries. Your investor, like I could say to an investor, say I had money in another country, right?
Yeah.
And then that person could invest, but no one in the US no investors here, no one's allowed to do that. You have to do it individually.
Yeah, another great question. So let me clarify that. So 100% it's legal. You can buy it and you can store it and hold it yourself.
Right.
What the SEC hasn't gotten along to is they've turned down every single application before them to have a Bitcoin exchange traded fund. So that's kind of the white whale. Being able to just have Fidelity issue a Bitcoin fund that just says, hey, you can log into Fidelity and you can invest in a share of this fund. And all the fund is going to do is buy and hold Bitcoin. Now, right, it's not as great as what we just walked through, where I can physically be sure that I have custody and possession of that asset myself. But it would just be like buying Apple stock or IBM stock. You'd have it through that fund. They are close though. The SEC has approved, there is a Bitcoin futures fund that they approved, and it trades on Wall Street. You could go buy it now. I don't recommend it because I don't know why they did this. Most everyone in the industry is very upset that they did the futures exchange before they did the regular ETF. So the futures one, it doesn't track the actual spot price today of Bitcoin, right? People are covering longs and shorts and doing derivatives of what they think the future price of Bitcoin will be. So that exists, and you can do it. The fact that they did the future usually is a good sign that they're very close to doing the regular ETF. And I always joke with my dad, I've talked to him a lot about Bitcoin. I'm like, you'll get into Bitcoin when, right, you can just call your investment guy and say, hey, buy me some shares of the Bitcoin ETF. I think that's how most people will want to get into it. They, a lot of people, they're just like, yeah, digital possession of an asset. I don't care. I want to see the number go up, and I want a piece. I think that's where it'll go. I think it's close.
I just wondered if there's any benefit, like, is it a benefit to buy it somewhere else? Let's say I have a Cook Island Trust. Is it a benefit to buy it through that so that our government doesn't see it? I mean, I'm not trying to like do anything illegal. I was wondering, is there a benefit to that, since it's really probably currency that's more likely to be used internationally than here?
Yeah, no, you are speaking my language. It would be great to do it, but again, I think it's challenging. If you tried to buy in a foreign exchange, an exchange that is located overseas, your IP address, I don't think it would let you do it as an American. So I think the on and off ramps are pretty strictly enforced. I think you'd have to buy from Coinbase or something like that, but there's nothing stopping you, right? If you messaged me afterward and said, hey, I want $1,000 worth of Bitcoin, and send me that equivalent, and it would just be a private transaction. I'll give you the cash, and you can send me Bitcoin. That's totally legal. There's no problem with that. But yeah, it can be a little bit tricky to get it. In a perfect world, right? Yeah, you could get it without feeling like you go through, like in the banking world, it's called KYC, which means know your customer. So no matter where you sign up to kind of get an account to buy it, you go through know your customer. You're putting in passport or driver's license information, your address, and stuff like that.
Preston, last question.
It wasn't a question, it was more of like a revelation that I had a couple months ago. I was like, I don't understand what blockchain means, but I understand real estate. And I kind of thought it was like, it's basically the chain of title for a house, but for a digital asset. So that's kind of how it made me think, like, I don't know if anybody didn't understand what blockchain was, but it's like, you can just see
where we see it.
Every transfer. So that's kind of how I.
That's a good analogy. I think that's accurate. Well, we've gone 10 minutes past, and I know that everyone's time is valuable, but Joel, thank you so much for the preparation and for bringing it. This is really, really informative. So for the handful of us that are here, we'll,
thank you guys. I appreciate it.
Do you mind? Well, I'll just drop your. Do you mind if I share your contact information with the group once we go out?
Yeah, yeah, absolutely. Please don't be shy to reach out. I'm happy to help anyone get in if I can.
Awesome. Thanks, man. You have a good one. We'll see you next week.
Yeah, thanks. I'll see you next week. Thanks, everyone.
Bye.
All right, thank you.
Are we gonna have like these slides and stuff?
Yeah, I'll drop it for you guys.